Jarand, thank you so much for joining us here at WECA 2019. Welcome back.
Thank you.
How's it going so far?
Very well.
Good.
Yeah,
good.
I enjoy it.
Good.
Yeah.
You presented a keynote on before the panel on investments in a low carbon world. Can you tell us a little bit about that?
Yes. Well, basically, the discussion was about the massive public pressure to the industry now to reduce emissions, both within the sector, but also to reduce the consumption of oil and gas. And how do we relate to this in the industry? Will we get the investments we need? And will we do the investments needed to reduce the emissions? So basically I gave a few perspectives on where do I think the peak oil is going, or the oil demand is going, and what do I think about the global emissions, and basically what will be the investments going forward. And for example, I think that the peak investments in oil and gas is already behind us. We will never invest so much as we did in 2014-15, never ever in the future again.
So do you think that's a problem? I mean, do you think that that decline is going to have a negative effect on the industry?
No, I think current investments levels is sufficient. We have had actually a very disruptive change with the shale introduction of shale oil to the industry. And the dynamics of that and the competitiveness of that has really changed the industry also. So that is a kind of intermediate step in the energy transition. But eventually it will be less demand for oil because technologies like electric vehicles will take off.
Mm-hmm. So how do you see the supply-demand economics changing?
Yeah.
And what will replace that reduction in demand?
Yeah, I think these two disruptions that is happening is one is the shale that will impact them more the next decade, and then also the change of consumption technology like EVs. So in sum, I think that this will must deliver only the volumes that are competitive below $50 in break even. Only those volumes will be brought to the market, and the oil price is then likely to be on average between $55 and $65. But it will be volatile, so it could be much higher and much lower in some periods. But eventually we will have a declining global production of oil from the 2030s. But still, even in that market, we need to invest because the well decline, the underlying well decline, is much faster. So even to be flat or to have a decline of 2%, you need to continue to invest in the industry.
So what do you think are then the exciting opportunities within the energy transition that will come about from that?
Well, first of all the investors are very concerned about emissions and about the social responsibility. So companies need to invest to reduce the emissions from the production process of oil and gas. And actually those emissions are as big as all the cars globally. 3.5 gigaton is those emissions. Most of that is actually methane leakages, but it's also power generation within the sector, and it is heating and cooling, for LNG, for example, or for the refinery processes. So here, this process is far from optimized. So we can invest a lot to reduce the emissions, and that could actually have bigger impact short and medium term than the switch to electric vehicles.
So an opportunity to perhaps in that technology, but then also perhaps that's a big challenge that lies ahead.
Yes, of course, we need to reduce emissions to comply with the climate goals that we have. And as I said, the sector has a lot they can do internally. I mean, regardless of how the demand is developing, but also as a consequence of the focus on non-fossil fuel. Of course, the demand will also go down. So eventually we will also kind of have that challenge. But the really big growth area will be offshore renewables, both offshore solar, but also offshore wind. And this requires many of the same capabilities as offshore oil and gas. So I think it's a big opportunity for both operators and suppliers to switch to investments in offshore renewables.
So with all of these changes, how do you see the capital structure of the energy industry changing?
Yeah, very good question, because the oil projects that we are used to, they have high risk, both market risk, because it's far down the road we actually get the oil in, so we cannot hedge the volumes. And also it is risks related to project execution, typically it's cost overruns. So that's why you have a capital structure which is very high equity financed. You know, it's 85% equity, 15% debt. But in the future, this capital structure will be almost vice versa, 85% debt and only 15% renewables. And that is required to get some return on your equity in the future. Because the renewable projects has much lower risk, many of them have so far got governmental guarantees, but also the technology is actually simpler. Is not so much project risk related to this. So the big oil companies, if they want to be major energy companies also in the 2050, they need to decapitalize in the sense that they need to pay back equity to shareholders through dividend or share buyback, and borrow much more money to have a much more leveraged capital structure that they can use to finance the renewable projects. And shale oil is actually a step in that direction, because shale oil is much simpler process also than these mega projects offshore with bespoke huge platforms. So shale oil is typically smaller projects, $5 to $50 to $100 million, to buy some wells in some area and build up some pipeline infrastructure, etc. And that is more similar to renewable projects actually, and also in terms of capital structure, because typically we then have 50 to 70% debt, and vice versa on the equity side. So in that sense, it is a step towards the green future is actually shale oil.
There we go. And where does Rystad Energy stand within all of this change?
Well, we have invested a lot to build up what we think is the only actually global database for all power plants. You know, so to really be able to advise our clients on the energy transition, we need to have the data bottom up. Every single solar plant, every single nuclear plant, every single windmill, and we are putting that together, more than 1 million plants, and then to prepare for a advisory around the energy transition. And especially the issue is the intermittence of the power, because with wind power, of course, you have a lot of power from in some periods, but if you get, for example, a high-pressure system weather-wise in December or January in Northern Europe, you will not produce any power. And even if you had all the storage in the world, you will use that storage for a few hours. So we need to have backup capacity to deal with this intermittence. And to do calculations around that is one of the interesting things we are doing now, to be able to guide the governments and companies on the energy transition.
Very exciting stuff.
Yeah. Mm-hmm.
And how does being at an event like WECA aid you, for example?
Well, I meet a lot of clients or potential clients. So of course it's very nice to get a very condensed forum to talk with all these people.
I'm sure, and especially giving your presentation this morning, it's so fantastic to hear about what all of the different areas within the industry are doing. I think that collaboration spurs on a lot of growth and change within the industry.
Yes. I mean, it's technology companies contributing, it's financial institutions, and actually investors are putting a lot of pressure to the sector. They're actually been leading. I think surprisingly to many people, investors has been maybe one of the strongest green force to change the industry. And as I referred to, stated by one organization, I don't know if that is totally fair, but at least they state that $11.5 trillion has been taken out of the fossil sector, and they have been committing to not invest back in the fossil fuel sector, which is about 1,100 investment funds that has done that already. So this just shows the strong push from the investors globally to deal with the current situation of climate change.
Oh, it's exciting times here. Thank you so much for your time. And
Thank you.
I'm not going to keep you any longer. I know you've got a lot of meetings for the next 2 days.
Yes, thank you.
Thank you very much.
A pleasure, thank you.